did see the bounce back in June that would be anticipated once COVID-19 regulations and restrictions were started to be lifted and people could start to move about and consume in the way that kind of looks a bit more like pre-COVID times. We would have seen a boost in June, and we did, and we saw more than 4 million jobs added on net and a kind of a rebound in consumer activity, et cetera. That was all well to be expected. But the fact that it's already petered out in July, so we saw a net of 1.8 million jobs added, that's pretty impressive. I mean, it's still positive growth, but it's a fraction of what we saw last month. That reflects the fact that we already have some restrictions going back in place in many states that saw a rise in COVID-19 case numbers, and it means that the numbers for Q3 are not going to be very impressive. And to a final point about we have to think about the US in terms of consumers. Consumer spending is 70% of US GDP. So the extent to which people can move about, can spend, feel comfortable spending, have enough savings to spend will determine really how the entirety of the US economy looks later this year. And we did see, although Republicans were saying that the unemployment benefit was a disincentive to return to work and it was not being kind of productive. I think we're really too soon to be thinking about incentives to return to work, because at the moment, so many sectors are still kind of feeling the decimation that came from COVID-19 restrictions. And even now, we've seen a very high savings rate. So households that have disposable income can't spend it because travel is not possible, normal consumption is not possible, or they don't want to spend it because we're facing this very uncertain economic future. And I think we still have several more months of that to go.
What seems to be particularly troubling is just the decline we're seeing in the participation rate, particularly in that key 25 to 54 age range. Does that suggest that there are those who are just becoming disillusioned with the limited opportunities they see and they are voluntarily taking themselves out of the workforce?
Yes, definitely. And I think we've already lost effectively a decade of work in that regard in terms of job losses, and bringing those in who were on the margins of the workforce, who previously had been hit by the global financial crisis and the downturn related to that. And it took really the better part of a decade to start to reduce those kind of segments of the labor market for people who were disillusioned and had been enticed back in by the fact the economy was so good up until this January. And now we're back down to levels that we were seeing kind of in the early 2000s, which is definitely a worrying concern. And especially considering that the jobs that are most vulnerable to kind of long-term loss are going to generally be those that are kind of high contact intensity, food service, kind of anything kind of involved in the services industry, and those industries will be the slowest to recover. So those already somewhat insecure jobs that took some tempting people back into the labor market are now going to be the most kind of the longest hit, if you will, by this crisis. And it is a major concern for what the participation rate will look like even in the next 5 years.